Welcome to another episode of the Ambitious Legacy Podcast. I'm your host, Sabine the Purpose Lawyer. Thank you for listening and thank you for helping me be on purpose. All right, I know it's been a minute, so please excuse my absence, but I am back. And if you have been here before, if you're accustomed to watching this show, I just want to thank you for always being here and coming back every time. And for those of you who are new, this is a podcast about legacy, about protecting your assets, your wealth. But also, when I started this channel, I wanted to also bring in conversations about life and love and all the different aspects that make us who we are, which plays into our legacy and the mark that we make. So we're going to get into that in the coming episodes. But today, we are talking about trustees, right? And the reason why I decided to pick that topic for today is because I get a lot of questions about what does a trustee do? So people hear about trust, and just for those of you who have never heard about trust or heard me explain trust, a trust is really a legal document that allows you to leave your assets to your loved ones. If something were to happen to you, it allows you to manage your assets here during your lifetime in case you become ill. But it also helps to give you that security of knowing that if there's something goes wrong, that your family, your loved ones could just step in and continue to manage things and to walk out your wishes without court intervention, right? So it's a way to bypass the court process when somebody dies. All right, so that's a trust in the most simplest way. Now, the trustee is the person who you leave in charge of that trust that holds all of your assets. So initially, once you create it, for certain types of trust, you might be that trustee, that person who is managing and running your trust. That's usually for a revocable trust that you have the ability to change. And so initially, you will be the trustee. Now, there's also an irrevocable trust, which is not as flexible. We say that they're unchangeable because it's very difficult to do so. And initially, you are not the trustee of that trust. But just know that when someone passes away, no matter what type of trust you started with, it's going to become an irrevocable trust. It's not changeable. And so therefore, it's going to go according to your wishes that you put inside that trust. So the person who's going to walk out these directions is the trustee. And that's who we're going to be talking about today. What is this trustee person? What do they do, right? And what are their responsibilities? So let's get right into it. Now, people often ask me, so now if someone is a trustee and a trust doesn't require court intervention, how do we know that the trustee is doing the right things? So I wanted to not only talk about what a trustee is supposed to do, but also the consequences if they do not do what they're supposed to do. So the first thing that the trustee is supposed to do, first and foremost, they are responsible to the beneficiaries. The beneficiaries are those who are benefiting from the trust, who is going to get whatever the trust says that they can get, right? So those individuals are like the most important people in the trust, and the trustee is supposed to make sure that they're doing whatever is in the best interest or that's best for these beneficiaries, right? So in order to do that, they need to know what the trust says. So the first thing they need to do is read and understand what the trust says, what their responsibilities are. It's all written in the trust. So the trust gives the trustees their powers, it gives them their duties, it tells them what they can do, what they can't do. And also, each state has their own laws as to what trustees are supposed to do. So if your trust is going under the laws of, say, the state of New York or the state of California or Florida or whatever, you're looking to that state's laws to say, okay, what is a trustee allowed to do? That's if the trust doesn't really say it or if it's silent. There's still a set of rules, right? So being a trustee is what we call a fiduciary duty. So you're held to a higher standard than just, any old somebody, right? So because of that, the laws tell you what you're supposed to do with this duty. And primary number one is doing what's in the best interest of the beneficiaries, right? If you think it would harm a beneficiary, then you probably shouldn't do it. So that's the measure. So I feel like I'm rambling. Let me gather myself back in. So number one, I said they're supposed to read and understand the trust, right? So the trustee needs to read and understand the trust. If they don't understand it, which is understandable, right? You don't have to be a lawyer to be a trustee, but you do have to have, I guess, a level of willingness and a level of capacity, right, to be able to, if you can't read it and understand it yourself, go to someone who can explain it to you, like a lawyer or another professional who deals with trust, who will be able to break it down for you and help you to understand what the trust says and what you're supposed to do, right? So as long as that person is capable of doing that and capable of sort of being organized and following rules, you can be a trustee. There's also professional trustees, companies, banks that you can hire to be a trustee. Even if that person who's the trustee feels like, whoa, this is way too overwhelming, even for me to like sit in this seat and be guided by someone, I'd love for someone to do this job with me. They can typically bring on a co-trustee to help them fulfill these obligations. But again, the trust has to say that that's okay, right? So, okay, number one, understand what the trust says, review and understand the trust document. That's number one. Number two, the trustee has to be very careful and not what we call self-dealing, right? Not taking opportunities away from the trust to give to themselves, or not taking funds or assets from the trust to give to themselves. Now, sometimes a trust might say that the trustee has an opportunity to, say, buy assets from the trust or borrow assets from the trust. Now, but this needs to be sort of all in writing. If they're buying something or taking advantage of an opportunity from the trust, it has to be at fair market value, like if someone off the street was to come in and do that, right? Because the idea is you don't want to be doing anything that's wrong, that you're having a personal gain that's taking away from the trust, which is now hurting the beneficiaries, right? So that's number two, make sure that they are not self-dealing. Number three is the trustee really needs to keep an accounting, right? They need to keep track of all the money's coming in, all the money's going out, all of the accounts, what is happening to the trust and what's happening to the trust assets. That's basically what an accounting is, right? So the trustee, again, if they're not capable of doing this, like if they're not a math person, they can definitely hire an accountant, a CPA, someone who is in a financial position that can help guide them and keep track of things to make sure that they are following the appropriate rules according to their responsibilities, right? So also with that accounting, it usually needs to happen at least once a year, and they're required to let the beneficiaries know, or if the beneficiaries are minors, let their guardians know what exactly happened within, the trust. So through this accounting report, and it could be even more often, like quarterly or I was going to say biannually, like, twice a year, to just make sure that they're, giving a good report as to what is going on in the trust. And typically the trust is going to say how often this needs to happen, right? Okay, so next one is number 4. So we had review the trust and understand it. 2, no self-dealing. 3, keep an accounting. And then number 4, tax filing. So the trustee is responsible to make sure that the trust files taxes, right? So when someone receives an inheritance, depending on the amount of the inheritance, we're just going to assume that it is a non-taxable estate. Let's just keep it simple. So you receive the inheritance, it's tax-free. The beneficiaries don't pay taxes on it. However, until those assets are transferred to the beneficiary, while they're sitting in the trust or trust accounts or investment accounts, they're typically going to be creating income, right? They're going to be gaining income, growing. That's what should happen and supposed to happen, right? Now, that income that is being produced by the trust, that gets taxed just like everybody else gets taxed, right, on any income or gains that they receive. So the trustee needs to make sure that those tax returns are filed from for the trust, and that the appropriate taxes are being paid annually. And that usually needs to be done as a strategy, because they want to make sure they're maximizing the amount of money that stays in the trust and minimizing the amount of taxes. So that usually you want to have a tax professional help you decide on making distributions, giving out money to the beneficiaries if that needs to happen, or paying stuff for the beneficiaries if that needs to happen, and when you should do it versus when you shouldn't do it, right? So that's a strategy that needs to take place, and that should be worked out with a professional. Okay, that was number 4, tax filing. Number 5 is inform the trust beneficiaries of what's going on upon request, right? So the beneficiaries have a right to know what's going on with the trust, what are the trust assets, what are they entitled to, things of that nature. They should be able to get a copy of the trust to be able to review it, be able to inspect the trust and trust accounts, documents, things of that nature, because again, the purpose of the trustee is to be there for the best interest of the beneficiaries. And so the beneficiaries need to know like what is going on. They have a right to have this information unless the trust says they don't have a right to have this information, but generally they do across the board, and you want to keep them reasonably informed, especially if there are issues that arise, certain decisions need to be made that are major. It's a good practice for a trustee to inform the beneficiaries and keep them informed. So that was number 5, right? Number 6 is reasonable care. So, just assessing what the capacity is of that trustee to do their job, right? And to do what's right. They need to assess that. Basically pay attention. Or is this something that you could do, or is this something that's above your head? And then take reasonable care, like not to be risky with managing this trust, not to be risky with managing trust assets, because it is again something that could really get you in trouble. And I think I'm gonna have to break this into 2 videos because it's already going long. So the next part of this video, part 2, will be the consequences of not following the rules as a trustee. So we'll get into that in a little bit in the next video. So I'm going to end this with reasonable care, right? Following the trust directions, taking reasonable care to do what's right. If you think something is wrong, don't do it. Ask questions, get advice, or be advised, both, right? As the trustee is managing their responsibilities. Again, because this is a fiduciary duty. It is, a trustee's held to a higher standards. They have to follow the trust. The person who created it is trusting in you, no pun intended, to do the right thing. So because of that, trustees are really held to a higher standard, not to beat a dead horse, but all right, so those are the general duties of a trustee, right? It can get a lot granular than that, but just to give you an overall, these are the overarching categories that a trustee manages and deals with all types of issues, from taxes, accounting, to, understanding the trust, making sure that distributions and stuff are being done and things like that, and the trust is being followed. So I hope this was helpful to you as like your intro to Trustee 101. And if you have any questions, look, I am the founder of the Ambitious Legacy Firm. If you need help, if you need questions in this area, please feel free to reach out to me. And also, if I can't help you, I'll be happy to give you to a trusted attorney in my network that can help you with your estate planning needs or your burning questions, right? Because it's important to be able to have the right people to answer your questions so you get the right advice. I've seen it all. So that's why I offer that out there. And I wrote a book. It's called You're Richer Than You Think. And it has tons of topics about estate planning, wills, trust, the difference, the different assets, how to deal with real estate with your estate planning. So if you want more information, or you just want somewhere to start so that you can have these conversations and be educated about it, pick up my book on Amazon. It's called You're Richer Than You Think, and I'll put the links to everything down below and how you can contact me, etc. Now, stay tuned for the next video where I will get into the consequences of not following the rules as a trustee. Thank you for coming. See you next time.